Joins us live out of Melbourne. So, Chris, we'll start with you to welcome you into the show. Talk us through markets and what you're seeing in trade today, because we are flatlining.
Good afternoon, Ingrid and team. Yeah, look, it's a bit of a nice recovery from what we saw earlier this morning. SPI futures were down about 7 points on the lead-in. I think we blew out to maybe 20 or 30 points down, and we bounced pretty strongly off around 59.50 on the SPI. 5,900 on the SPI, closer to 59.50 on the cash market, where there is some support. So, you know, I've been talking about this, I was talking about this last week, we have been locally very US-centric, and it was all leading up to, obviously, the FOMC last night. There wasn't too much of a departure from what people were expecting, and hopefully this bounce today, albeit it is very early and not to draw too many conclusions, but hopefully this bounce is a decoupling from, you know, this US-centric focus that we have had. Again, it is very early, so I don't want to suggest that it is that, but it would be nice to get past everything that's happening in the US and focus back on, you know, what's going on locally and some more company-specific stuff.
All right, I want to get our guest host views now that we're into the next hour on the flat trade at the moment. What do you make of it, Adam?
I think, yeah, it looks like the market's sort of marking time a little bit here. The resources obviously giving a positive lead. The banks obviously, you know, a little bit lower. Energy sector's quite interesting with Woodside as well as Santos having a little bit of green there, but then the telcos still dragging the chain as well. So yeah, a little bit of a mixed market. Good to see QBE up today under that $10 mark. Not that I'm saying it's a buy there, but it is very good to see a little bit of green there for QBE. So yeah, I think just marking a little bit of time.
All right, Rudy, you're laughing, so we better get your right of reply there.
Well, I don't know if anyone needs a right of reply when someone mentions QBE, but I mean, I maintain, I mean, the whole price action and even the stocks that Adam comments on, like QBE, it really shows that people are simply rotating investment portfolios here. I mean,
we had a trade buy on QBE yesterday with one of our guests on the show.
No doubt. I mean, there will be a trade buy at some stage on Maya, right? But because it falls deeply enough, I mean, because it doesn't make it a great investment for the years ahead.
QBE out of the top 20.
Yes.
So that's very interesting. It's
top 20 doesn't mean that much, no, man.
75% of almost the volume traded in the top 50.
There you go.
Yeah, but is that because they are on the index, or is that just, or are they in the index because they're? I mean, it's a chicken and egg thing, right? And I'm thinking it's the second and not the first one.
No, it's the second.
All right.
But anyway, I think it's portfolio rotation. I think the main question, I would probably put to Chris Conway, for example, is, Chris, how long do you think, what are the legs of this portfolio rotation? Do you think it has to go further to run?
In terms of the overall market action, yeah, look, it probably has further to run. Yeah, well, I was going to say, I think it has further to run in terms of that we continue to grind sideways. And again, it's all about, as I said, pivoting back from what's happening stateside. And I know I've been rambling on about this for the past couple of weeks. It's actually starting to frustrate me a little bit because I think there are some good things going on locally. You know, we came out of reporting season looking pretty good. You know, earnings had caught up to prices. You know, prices had extended and there was the expectation that earnings wouldn't match, but they did. You know, we've still got a pretty strong local Australian economy, but you just look at the price action. Rudy, you were just talking about the price action on the ASX 200. Since that big wipeout when we moved from 6,100 down into 5,800, creating that 300-point range, we have been trading sideways in an ever narrower range. And that says to everyone that neither the Bulls nor the Bears are winning at the moment, and investors can't make up their minds. So, yes, Rudy, to your point, there is a lot of rotation going on within that, but ultimately we're going nowhere.
Chris, before we get to some of what you're watching in the market at the moment, particularly with your buyers, I want to go to an email, which I'll come to all of you on, because this comes from Elizabeth, and she asks, is Telstra finally now a buy at this lower level with a now sustainable dividend? I hold Telstra sitting on a loss in an SMSF in pension phase, so there's some background. Thank you for your email, Elizabeth. Telstra, I'll come to you in a moment, Chris, but I might kick off with you, Rudy. Well,
I'm assuming here that Elizabeth has owned Telstra for quite a while. And then I am the messenger here, Elizabeth, that you will not see your money back. Telstra is not going to go back to $6 or whatever. It used to be only less than 24 months ago. I also picked up that there was a mentioning of sustainable dividend. That's very much questionable. They probably have to cut their dividends in 2021, 2022, something along those lines. In the meantime, there is probably an expectation that they can maintain the current dividend, and that will support the share price to the downside. I know there's some speculation in the market that the arrival of 5G in the mobile space will bring the balance back to Telstra as a preferred supplier for mobiles in Australia. But there's a lot of other stuff happening, NBN not the least, and TPG has yet to launch its attack on Telstra's market share here.
Okay.
So I think the uncertainty is really, really elevated. And in very short term, you have waited way too long to sell Telstra shares.
Chris, I'll get your view. Do you agree with Rudy? Do you think it's going back to $6 anytime soon?
No, absolutely not. I would reiterate Rudy's very good points and add a couple more. Their mobile division, has the potential to come under some real heat as competition sort of rebalances in that space. And, the opportunity cost. So taking Elizabeth's personal circumstances out of the equation, as we always should, and just looking at the company itself, I can think of 20 off the top of my head better opportunities out there than staying in Telstra for all the reasons that Rudy and myself have outlined.
Adam, looking at Telstra, I'll get your view as well, but
Yep.
also on the broader telco space,
Yep.
are there any that you like?
No, we've got to sell on TPG, Vocus, Telstra.
No shining light in there.
Chorus is probably, CNU is probably a little one that might do okay, but yeah, mainly staying away from the telco space at the moment. I will point out though, Telstra created a new low today, 326, which is a yearly low. When people say, is that sustainable or has it bottomed? There's a clear example today that it has created a new yearly low
Right,
today.
it hasn't bottomed yet. Well, it might, who knows?
It's going to bounce at some stage.
Yeah.
But the question is that
How
going
much?
to be sustainable?
Yeah. Chris, I want to get back to you on some of the stocks you're watching in the market. I mean, are you finding many opportunities in this market? Any buys that you like at the moment?
There's always buys, Ingrid. They are harder
there
to
you go.
find, I think, at the moment than a little bit than usual, however. One of them is Pinnacle, formerly Wilson Asset Management. There's a few things going on here. The broad theme is that, as we all know, superannuation contributions are going to balloon out to 12% by 2025. So, it's a growing industry. There's been lots of research around that is a growing industry. It won't, it'll be lumpy though. It won't all be delivered equally across all the players in the industry. Pinnacle itself is growing very, very rapidly. They recently carved out some Macquarie employees who ran a fund that by Macquarie's advertisement had been the best performing Australian equities fund over the last 10 years. So they've picked up that entire team and they're going to be starting a new fund. Their growth is exceptional, 66% this year, 40s in the 40s next year and out to 30s in the next year. So really good growth profile. The other thing is that, I wouldn't make this the investment case, but this would be a nice cherry if it was to come to fruition.
Yeah.
As Perpetual has sort of been sniffing around a little bit recently. They're looking to attract a new CEO. And they're high on Ian McCoon, of course, who runs Pinnacle. So they might just buy them out entirely. Now, again, that's not the reason why we're investing. The investment case stands on its own. But as I said, that would be a nice cherry if Perpetual came along and hoovered them up at a nice price.
Okay. Anything you're finding interesting in the market at the moment, Adam?
There's a couple of little things. We're still staying with that resource story.
Yep.
Still buying the BHPs and the Rios of the world. I've been sort of looking at protecting clients' portfolios a little bit. Being a little bit more defensive, keeping some more cash on the sidelines. I just feel that this market probably is due for a little bit of a pullback. So being a little bit cautious on our buys at the moment.
Okay. Are you cautious at all, Rudy?
I am a little bit cautious as well, but that's also because I have a complete different portfolio which doesn't include mining stocks, resources, banks. So I have a portfolio that has performed really, really well.
What does it include?
And it does include, for example, Aristocrat Leisure, which today has a data breach, and CSL and things like that. So my portfolio has performed really, really well, and that in itself has made me a little bit anxious because you now get the portfolio rotation.
Yep.
So when you may not see it on the index level, but I will see it in my portfolio, and I'm seeing it today. So that's
Okay.
why I took some money off the table recently. But just following on from the Pinnacle tip we just heard, that small cap financials, basically what they are, that sometimes can have some really gems that perform really, really well for a while. In particular, when fund managers go from a relatively small position and they grow for 3, 4, 5 years into a sizable. And from that perspective, I think investors who are interested in that one, they can also have a look at Mullers. which is also listed and has performed really, really well since listing.
Yep.
And the other one would be Blue Sky, which is in a similar, it's a little bit more advanced than Pinnacle is, but has performed also really, really well. And it often takes a while before the market really catches on those opportunities.
Chris, what do you think of that? And also Altura Mining, because I know you're watching that one as well. Is that a buy for you?
Yeah, it is. So, look, obviously more on the speculative end, lithium play. They've moved from production into the shipping phase, about to ship their first shipment to China. Again, there's another player involved here, and again, it's not the reason for the investment case, but there's a Chinese company, Optimum Energy, I think it is, already holds a 16.8% stake. They're in very, very early discussions about taking a bigger stake or indeed taking over the company. So again, like I said, that's not the reason for the investment. That would again be a cherry on the top. But Altura Mining, as I said, a bit more speculative, moving into shipping phase.
All right, and you've got a very specific, I know, trading strategy, Chris, but Adam, I'll bring you in on that. Lithium, specky lithium. I mean, you've got to be a very specific type of investor or trader to want to be in specky sort of lithium play.
Yeah, you need to be very hard and have some good rules in place. So if certainly, you know, and those rules are especially taking profits as well as also being able to take some losses. So that those trading strategies will do you well in these high volatile, high octane stocks. You know, with Altura, you know, there's a little bit of a ceiling there at sort of 50 cents. It seems to be coming up there and then sort of pulling back. So, you know, there's the kind of area. Unless there's a takeover, as rightly pointed out, there could be some more activity there. But certainly that sort of 50 cent mark, you would look to be able to take some profits. And I think that's what you need to have trading rules in place when you're talking about these high volatile stocks.
Quick one from you, Rudy.
Well, you asked earlier what I own. I mean, I own, amongst other things, I own small cap industrials.
Yep.
And they can be volatile. Just look at Altium and Wisec in recent times. But at the very least, they have a long-term uptrend. So I need to be a little bit less worried in the short term. With mining stocks, that's not always the case. Right? If you wait long enough, it doesn't mean the share price will be higher. With industrial stocks, in particular, if they have a growth profile, that's almost by definition the case.
All right, Chris, we will leave it there with you, but it's always great to get your insights. Thanks for joining us on the program today.
Thanks, guys. Cheers.
Chris Conway there from the Stock Report. We'll take